Thanks very much. I want to talk to you about DGR Global, which is a talk in some respects in two dimensions. One about DGR Global and what an investment in DGR Global looks like. And in other respects, it's about the broader family of companies that we have within the DGR Global group. So we do a lot of things from a top-down perspective within the group, and what I thought I'd do is do the same thing with respect to this presentation. So what are the things that are changing? And most of you would know that, particularly if you've got children, the world is changing and changing sometimes beyond your own comprehension. The changes are coming thick and fast. Everything, in my view, points to energy, and energy is now coming in varied forms and more localised. So what are the emerging trends? We've heard, or you've heard, about the electric vehicle revolution. We're believers in that. Time frame, we'll see, but we know it's coming. Localised power generation and storage is going to become, I think, more of a trend. Most of us not only had our banks, we had our utility companies, and I think that the push towards more localised energy generation storage, again, will be an emerging trend. There is going to be more of us living in urban situations, living for longer and wanting better living standards. All of those things are happening, and everything that you can see in that picture, if you've got good eyes, apart from the water and the grass and maybe the air, effectively depends on a natural resource to build it. So yes, the future's changing. Yes, it's going to be different. Yes, we might have space cars and battery operated cars, but all of those things ultimately demand resources to underpin those changes. And that's why, in my view, resources remain relevant, and notwithstanding the pace and the rate of change, resources will remain relevant both in the traditional sense but also in the new and emerging resources space. And DGR Global offers an exposure to all of those things. So you've seen the hockey stick effectively for what's expected to be lithium growth, electric vehicle penetration rates and all the rest of it. So that's an emerging trend. That will be something which will push forward for another 40 or 50 years yet, probably. The big winners out of that are predicted to be lithium, cobalt, graphite, nickel, rare earths to some extent. We have an exposure to all of those things other than rare earths, and which is fairly small in quantity, but graphite is probably the only one that DGR does not currently have an exposure to. I will show you that in a minute. Copper, nickel, cobalt, and lithium, of course, are the big winners. I'll show you where we have exposure to that through the group. So back on now to a traditional type of resource in oil and gas. Our view is that that is predicted to remain strong. This energy forecast via the BP Outlook also predicts the same thing. We're in that space in a couple of different ways. Gas, both domestically, as all of us know, particularly in the eastern seaboard, and internationally, particularly from an export to Southeast Asia perspective, remains strong forecast as well. Copper, we've got a massive exposure to copper, which I'll explain through a company called SolGold, which presented last night. That was a DGR-founded company, effectively, and we believe that the copper, and it's widely discussed that the copper forecast is going to go through the roof in terms of supply constraints. So if you're here for DGR to be an investment in an exploration company, sorry. If you're here for something a bit different, then this is where I think we've got something to offer you. So DGR isn't necessarily a mining company, although it's listed, and it's listed within the mining index. What it does is generate projects and other mining companies. So investing into DGR doesn't give you exposure to one commodity or one project. It actually gives you these 10 things in a nutshell. And the first 4 are really about diversity. Diversity of commodities, operational jurisdictions, which I'll show you in a minute, financial and international exchanges, a mix of resources in both the traditional sense and the new and emerging technology-driven resources that I just talked about. In my view, the long-term growth of both the companies within our family and DGR is underpinned by the forecast commodity exposure to all of those things that we talked about. We have a range, or if you like, almost a diversity of project maturity from infancy, so from grassroots right through to currently in production. We have an ongoing pipeline of project generation. We do the due diligence, so as an investor via DGR, We do the due diligence for you. You don't need to think about whether you want an investment in a particular project within a particular commodity. We offer a range of exposures to that, and we'll have done the due diligence as to why it stacks up. That's why we will have invested in it. You're investing, number 9, in our track record, more particularly that of Nick Mather, who to date has had 9 of his companies taken over. And you're investing alongside of Tribeca, who in 2016 were awarded a prestigious award for the best resource fund with I think 148% return in 2016. They have invested $8 million in DGR Global. From a commodity diversity perspective, as I said, really, and you look at that, that's within our family group of companies. DGR has an equity exposure to all of these things, which I'll show you in a minute through the group structure. The only sort of arguably sexy commodity that's missing from that is graphite. We have listings in London, both on the main board of the LSE and the AIM market. We have listing in Toronto through SolGold, and we have 4 of our companies listed on the ASX as well. So there's some international market monetary and exchange diversity built into that. From a project location perspective, you can see in the writing there on the world map where we're located. So Africa, Southern America, Australia, a little bit in the Solomon Islands, and of course it's growing. We're always on the lookout for good projects. We've always got our eyes open and our ears peeled. We generally peg and create projects rather than buy them. So this is the model. It starts from the bottom up, and we, as I say, generate a project. We do a top-down type of approach to where we should be looking, why we should be looking, why does this commodity make sense, why would this region make sense. And it was really that type of approach which took us to Ecuador through SolGold, which basically has now got a world-class copper gold deposit there. We then try and find stable, suitable entrepreneurial management to head the project up, to raise the money, undertake the initial exploration, and then obviously go on to where you've been successful, define a resource. If you've not been successful at stage 3, quite often there is a real art form in sidestepping, and a number of our companies have had to reinvent themselves over the years. It's very rare that you actually succeed on the project that you might float on, for example. At number 4, we're at that stage, for example, and you can see the company names up the left-hand side there are broadly in line with where those stages are. So SolGold, Oztin, Iron Ridge, they all have defined resources at this point. Armour Energy does in the oil and gas space. Armour Energy is now in actual production and sales of all of the oil and gas that it can currently produce. Oztin Mining, in the next couple of months, will start production. So our agreement with Tribeca was for $8 million with an option for another 2. We have about 18 months left to run on that arrangement. It's convertible into stock at 20 cents at their option. Otherwise, it's basically an unsecured loan bearing interest at 12%, which in this market was a pretty good deal, I think. Ben Cleary, who runs the Tribeca fund, is now on the DGR board. Not only are they pretty savvy investors, they're obviously very well connected internationally within the resources market, and we hope through our approach to doing business to leverage that to bring projects, management and investment opportunities into our group. So this is the group structure. DGR Global itself is listed. Everything on the right-hand side there are the listed stocks. I've been the company secretary for this group now for 9 years, and in that role I've noticed that not only do I have investors on the DGR register, I've noticed that where they have a particular desire or bullish outlook for a particular stock, then they've also invested directly into those companies. So for example, there's a number that are both in DGR Global and SolGold. There's a number of investors that are in both DGR Global and Dark Horse Resources, particularly for its exposure to lithium. So on the left-hand side of that graph around DGR are the entities that we've created that are yet to be listed, that are yet to basically have a sort of capital event. We are at the stage now of looking for management. That is the hardest thing to find in our experience. Somebody who is entrepreneurial and basically prepared to run it as if it was their own. We will then back them and help raise the money for that and give it a listing. So the companies on the left-hand side are involved in bauxite and gold, and then Auburn Resources down on the bottom left is involved in, it's got copper gold porphyry exploration play and a zinc project, also a little bit of exposure to cobalt. On the right-hand side, SolGold is currently in Ecuador with a 1 billion tonne deposit, copper gold deposit. Iron Ridge Resources is multi-jurisdictional within Africa, both gold and lithium. Austin Mining has 2 tin projects. One is about to commence production from a hard rock mining perspective in Tasmania. The larger project is in New South Wales. We hope to be digging dirt there later this year. It also has Mount Cobalt in Queensland, and we hope later this year to be releasing an exploration target for cobalt within that particular exploration play. Armour Energy has oil and gas on the Roma Shelf in Queensland. It also has greenfields exploration sites still in Northern Australia. And Dark Horse Resources is gold and lithium focused on Argentina. It's got good exposure to lithium projects, and I'll talk about that in a minute. And indirectly, through those various entities, we have an exposure to Lakes Oil, which I'll touch on in a minute. So this is the graph, or visual representation of the difference between the share price for DGR Global, which is the white line, and its net asset backing. And you can see that it trades at a fairly hefty discount. And I'll give you an example of that. So the colour coding on the bar chart really represents the different companies. The sort of maroon colour is SolGold. The orangey colour is Iron Ridge, and that's important for the next couple of slides. But you can see that the entire market cap of DGR Global is more than covered by one investment that it has in SolGold. It's only got a 12% exposure to SolGold, but that's worth more than DGR Global's entire market cap. So if you bought DGR Global today, you're not only covered by that one equity exposure to SolGold, everything else is free. We're paying you to take everything else, the exposure to everything else. And in my view, there's significant upside in not only DGR as an investment because of its diversity, because of its... Look, it's a long-term investment. It's not a buy today, sell tomorrow type of stock. It's not going to go up 200% on the basis of some drill hole. That's what the direct investments are for. DGR Global is a long-term investment, in my view, which will continue to grow for the diversity and range of projects, locations and demands that I talked about earlier. Okay, underpinning a couple of the re-rates that we've enjoyed throughout the group in the last couple of years. I just want to highlight 2 of them. SolGold, so these are both listed in London, SolGold and Iron Ridge. So SolGold, you can see on the extreme left of the graph, and I lived it, was very unloved for a long time. And Nick Mather basically got somebody to agree to invest at a premium, and it literally triggered a series of events that put confidence to the market in the company and its share price on the basis of rejecting BHP's farm-in proposal, accepting an equity placement by Newcrest, getting them to double down again, together with some spectacular exploration results, completely re-rated that company, as you can see, particularly in the last half of 2016. Iron Ridge was tracking along, again, extreme left-hand side of the graph, was tracking along an iron ore exploration company in Gabon. It was hard work. Iron ore was economically underwater. We decided as a board to transform the company into a multi-jurisdictional, multi-commodity company. We released that to the market, and from there, together with a series of announcements, particularly farming into the Chad Gold Project, which we now own 100%, it transformed the company. Looking forward, there are more re-rating opportunities within our family that DGR will have exposure to. SolGold currently has a 1 billion tonne resource. I would expect in the next 3 months that that will at least go up by 50%, if not more. We've started now all of the economic studies. We've got a regional program going. We've got 73 other concessions apart from the Cascabel project. All of this, in my view, is going to start drawing a lot more corporate interest. Iron Ridge is currently drilling its lithium project. Results are due probably June, July. The gold project will be drilling later this year. Armour Energy is about to start drilling a production well to expand its rate of production and sales of gas at Rome Shelf. That will quickly turn that company profitable. Dark Horse Resources, I would expect within the June quarter, is going to be drilling its lithium project at an existing mine site in Argentina. If the Lakes Oil court case is favourable to Lakes Oil, I would see that re-rating Lakes Oil. Dark Horse Resources has a 33% equity stake in Lakes Oil. Dark Horse's market cap, incidentally, is almost 100% underwritten by its current investment in Lakes Oil at the current share price. So again, you're getting all of its lithium and gold projects for free. AusTin is basically about to start hard rock mining in Tasmania in the next 2 months. Within the June quarter, I'd expect to see it put its cobalt exploration target out. And within the DGR project generation pipeline, we have a Ugandan oil project, which DGR owns 87% of, and we would like to be doing something from a market perspective in terms of a merger or an IPO of Auburn Resources, which has got Queensland exploration play. There you go.
Perfect timing.
Good.
Thank you, Karl.